BCTV 18 exclusive. Top sources at HDFC Bank have told CNBC TV 18 that the management believes it is a fine growth machine and that the team can create another HDFC Bank every 4 years. We also learn the management is not particularly perturbed by the recent fall in the company's share price. It blames this on misgivings about SEBI's rule on the disclosure of beneficial ownership. Lata joins us now with more on this exclusive. Lata, many thanks for joining us. The stock has been under pressure, but what are we picking up in terms of management confidence from here on?
Yeah, the main tenor of the bank management was that it is as good a growth machine as it has been in the last 25 years. Remember some time back, the new managing director, Shashi Jagdishan, had said that the bank can create an HDFC once in 4 years. Now, there was some doubt over it after the latest quarter, but the top management speaking to us was saying that, this is a 4-year program and, we are only 1 quarter into the merger. There can be bumps, and the road bump this time was RBI's tight liquidity policy, and of course that incremental CRR, which made deposits expensive. But they have 4 years to prove their merit. And, there is a secular story which will unfold. In fact, they already point out that when it's a question of creating deposits, they have done better than any other bank and better than themselves. The bank is still accounting for 19% of the incremental deposits in the system every quarter. I mean, the quarter ended December 31st, as well as in the previous 9 months, as well as in the previous 5 years. For a very long time, they have been able to create that kind of deposits, and they continue to do so. They also point out that even in this very difficult situation where people are moving from savings account to FD because of higher interest rates, their CASA or current and savings account growth has been better than most other banks in the country. They've also said that they've learned from the market's reaction now, and they will communicate more oftener and strongly in subsequent investor meets. Apparently, an investor day is planned in February. They said that their main message is that they want to prioritize margins. They've understood that they're not going to give up on margins, and growth will come as it comes. They pointed out that, they have inherited a large amount of HDFC borrowings. Those were not deposits, those were borrowings, and they will mature over the next 2 to 3 quarters. And they plan to replace some of them with even bringing down their asset book, running off some of their assets. But they expect a margin kicker as those borrowings of HDFC are replaced by low-cost deposits of HDFC Bank. So margins they expect are going to improve because of that. They don't want to give an immediate guidance on margins, but they see it as a secular story, that it will get to 3.4, 3.5. The long-term story is going to be one of improving margins. They went on to say they are not at all apologetic about the merger. They're very proud of it, and they expect the mortgage business to give them a lot more opportunities to cross-sell products and, other cross-sell mortgage to their other customers. They still believe that HDFC Bank's asset book, their loan book is the best in class. Now, because there is a Goldilocks scenario, there isn't a premium given for HDFC Bank. But once the downturn or a slowdown comes, everyone will know whose asset quality is the best, and that is likely to reiterate the importance of HDFC Bank. Just a word on new branches. Okay, before that, the SEBI rule. The management also thought that they got an unfair, sell-off because the SEBI rule requires that big exposure to one stock. You have to reveal the beneficial owner, and that's why people were selling off. They say some of the funds have even approached them to write to SEBI. SEBI's understanding is that if there is big exposure to a company where there is no identifiable promoter, then those funds are exempt. But HDFC Bank people who spoke to us, the sources said that this is not very clear to the custodians. And so perhaps it has to be put in black and white for that rule to be implemented. Otherwise, they get impacted. There was market disappointment on new branches. HDFC Bank said they will open 1,500 branches, but now they've scaled it down to 900. The management's, the sources' reaction was that has got nothing to do with deposit creation, because a new branch doesn't give them too much deposits. Older branches give them sometimes 10 times, 25 times the amount of deposits new branches give. So that's not a big thing. Also, these new branches are stuck because there's the Reserve Bank rule that if you create 100 branches, 25 additional branches should be in unbanked areas. And now there is no fresh list of unbanked areas. Almost all of the country has been already banked. So even their conversion of HDFC, the old HDFC branches into bank branches is stuck because they don't have a clear list of unbanked areas. So this was the reason why there was some difference between what they promised and what they could deliver. That's the sum and substance of what these sources told me.
All right, Lata, many thanks for joining us. Let's see if the market takes note of what Lata is telling us. The management at HDFC Bank sanguine about the growth prospects and not particularly perturbed by the way that the stock has been reacting of late. Tensions in West Asia continue.